55 points lower, so things are, I mean, down but not out. I mean, it's not going one way. And the problem is IT services. IT services index is down 1%, full 1%. There are 10 stocks in the Nifty IT index. You know, one is positive, 9 are pulling in the other direction. The one positive, of course, is HCL Tech, and the 9 others are all down and out. Wipro, LTI, TCS, and Persistent are the 1% plus losers. Wipro, of course, is down the most with about a 5.5% cut. We'll take a quick break here. We'll come back and when we come back, quarter se quarter tak, we take stock of the auto sector preview for the second quarter. We'll have Rishi Vora, Associate Vice President of Kotak Institutional Equities, who will be... okay, I think Rishi is with us now. Apologies for that. Rishi, great to have you with us here. Rishi is Associate Vice President of Kotak Institutional Equities, tracks the space closely. Rishi, set us up, set the sort of context for us. What in terms of how we should look at, or rather how we should approach Q2 for the auto space, and segment-wise. I mean, passenger cars and two-wheelers.
Sure. Good morning. Again, looking into 2Q, YOY numbers will not be comparable because last year the sector was impacted because of supply shortages. So more from a QOQ perspective, sequential perspective, the segments which has done well is domestic PV and domestic two-wheeler segment. PV segment, have seen a double-digit kind of a sequential growth, and that is majorly driven by improving supply chain as well as some channel filling before the festive. This time around Diwali, we have an early Diwali versus last year. So in this month of September itself, there has been some channel filling that has helped the wholesale volumes. Two-wheeler also, a few OEMs were impacted in first quarter of FY23 due to supply shortages again. And that is again, result this quarter we have seen that improvement, and obviously channel filling before the festive will also has resulted in double-digit growth. So a decent, we have seen a decent growth in a domestic two-wheeler and a PV industry. However, on the export two-wheeler side, there has been some pressure, especially in African geography because of very high inflationary pressures and obviously a dollar strengthening that has resulted in overall weakness in the export two-wheeler market.
Rishi, what are we expecting from Tata Motors this time? Because the JLR retail numbers were disappointing. There are concerns about US, Europe, where JLR has a great presence. Though in India things are fine, it's riding the EV boom, but it's impacted by what's happening globally. What's the expectation this time from Tata Motors?
Yeah, so obviously the company had guided for Q2 volumes of closer to 90,000 post the first Q announcement of results, but they actually reported 75,000 units. So it's much below what they had guided for, and that was mainly because again of persistent supply situation. So volumes nonetheless were on the disappointing end. But on a sequential basis, we do expect that margins will see an uptick from where it was in first quarter. Mainly, two reasons. The model mix would be favorable this quarter around with a higher Range Rover Sport models, and also the Chinese market has done well for them, which is again a margin accretive market for the company. So overall, we expect them to report a flattish EBIT margin versus a negative 4% EBIT margin last quarter, but nonetheless volume trajectory still remains a little bit on the disappointing side.
Hi Rishi, what about the two-wheeler space, in particular Eicher Motors? Talking about volume pickup, that's delivered the best volumes in September.
Yeah.
What's the view on the stock from here on? And if you could give us some more color about your current stance.
Yeah, sure. Again, the new launch Hunter 350, at least in the last 2 months, has been very well accepted by the market. The inquiry level still, remains at a very healthy levels. From this quarter perspective, one thing which we will be tracking closely is, how given that given that Hunter 350 would be, lower ASP product for the company, margins may come under pressure for the company. So from that perspective, we believe that despite the operating leverage benefit, margins for the company in this quarter may not see a material, increase from that perspective. So overall, export mix is also weaker sequentially. Higher Hunter mix will also weigh on their overall profitability. So volumes, they have done exceedingly well. But on margin fronts, we believe that may remain under pressure in the current quarter.
Right. In terms of the overall sector, which are your top overweights, Rishi, right now?
So again, valuation of the sector remains a little bit on the higher side. So for companies which we cover on FY24 basis, the sector is trading at closer to 21 times FY24 EPS, which is still on the higher band. So we have a very limited ideas in the sector. So we'll be overweight M&M and Ashok Leyland on the OEM side. And on the auto Eng side, we like Sona Comstar.
All right. M&M, Ashok Leyland and Sona Comstar valuations a little uncomfortable at about 21 times FY24 earnings. So needs to cool off a little bit. Thank you very much, Rishi. Great to have you with us here